Namaskar and good morning. Very happy, healthy, peaceful, and prosperous New Year 2019 for all of you. Now, 2018 was not such a great year for stock market investors. 2017 was a wonderful year, gave a lot of gains for most of the investors, but 2018 wiped off a lot of those gains. Now, the hope is 2019 will again be like 2017. We are entering 2019 with great hopes, great aspirations, and great determination. Now, the third quarter results of the year 2018-19 are going to come out one after another during January, February, and March. Generally, third quarter results are much better than first and second quarter. For most companies, not all, but most companies, third quarter is far better than quarter one and quarter two. Therefore, the mood can be very buoyant during this third quarter result. Now, the share prices are at various levels and generally very attractive valuations. Whatever gains were there in 2017 were wiped out in 2018, but that has left most of the promising scripts also at very wonderful valuations, very attractive valuations. Now, our focus generally is on mid caps and small caps and not on large caps. But during the year 2018, large caps moved up much better than mid caps and small caps for whatever reasons. But I don't agree with the logic behind that. Generally speaking, in the past, what we have seen is even for the biggest bulls of Indian stock market or anywhere else also, the greatest gains were given by mid caps and small caps. Now, 2019 also, I'm going to focus only on mid caps and small caps because, many erstwhile mid caps and small caps, like Titan for instance, gave huge gains, thousands of times, 10,000 times also, 5,000 times also. That much of gains were given in 2 decades' time by the erstwhile mid caps and small caps. And today, the people who bought them then, they are big bulls and they have earned a lot. Some of them are billionaires. So, therefore, we also can replicate their success only in mid caps and small caps and not in large caps. Anyway, we are all mid level and small level investors, and we need to concentrate on these mid caps and small caps. They are bound to gain, though they have fallen in 2018. They are bound to gain in the long term. Now, how do you pick up the scripts, mid caps or small caps, which are likely to gain in the years to come? The first and foremost is you will have to look for sales growth. Over the last 2-3 years, or if there is sufficient history for the last 5 years, how was the sales growth? And during the last 5 quarters anyway, how was the sales growth? If the sales growth quarter after quarter was reasonably decent, maybe it may miss in one quarter or so, but generally if it is decent, then so that sort of shares we will have to pick. Now, in many cases, the market should be great for the products of the company. Now, look at the market. Is this product of this company in need by majority of the people in our state, in our country, and maybe in other countries too? That is worldwide. So, if the greater the market, the greater is the expected success of the company. Now, some companies go for intensive marketing, some go for extensive marketing. In the same area, if you are going to add more and more customers, that is intensive marketing. But if you are going on adding additional geographies, that is extensive marketing. Then, in the case of many successful companies, what they attempt is backward integration and forward integration. One of the classic examples of backward and forward integration is, of course, the biggest company in India, Reliance. From the days Dhirubhai Ambani started making Vimal sarees, etc., then came polyester chips, polymers, and backward integration further, forward integration further, petroleum refining, etc. And they also attempted petroleum, crude, crude oil extraction, etc., where their success was not much. But anyway, that forward integration and backward integration gave Reliance a huge mammoth size and huge wealth. He is number one today in India and between the first 10 in the world. Now, that possibility also you can see. So, sales growth by intensive marketing and extensive marketing, backward integration, forward integration. Now, diversification. Reliance also went in for diversification like Reliance Jio and Reliance Retail, etc. So, when forward and backward integrations are almost complete, you can look for very lucrative diversification also. Now, all this means that the management must be very ambitious. Mukesh is very ambitious, but at the same time cautious also. Ambitious and cautious. Anil Ambani is also ambitious, but not very cautious. Of course, a little bit of luck also is required. Now, in a company, after you see this forward integration, backward integration, sales, intensive marketing, extensive marketing, diversification, ambitious management, and all these things, then what you look for in a company, you see, when you take their financials, look at the sales to profits ratio. Say, if 1 rupee sale is there, what is the level of profit? 30 paise? 25 paise? Something like that should be reasonable. But if 1 rupee sale, 1 paise is the profit, now whatever be the sales growth, the profit growth will not be that much. Sales to profit ratio is a very good indicator of how well the company is going to reward you as an investor. Now, sales to profits ratio also depends upon another thing. See, raw materials. Are the raw materials available in plenty? Or is there a raw material shortage? So that's one of the necessities. The second thing is raw materials. One side, if the raw material prices are increased, are you able to increase the sales price? So that is freedom to increase the product pricing along with the raw material price increases. Then you look for whether the ambitious management means whether the company is willing to expand in the existing marketing, in the existing products category, and what is the level of expansion that they are planning. Huge expansions means the company management may not be able to manage it. Sometimes the expansions take 4 years, 5 years, 6 years, like that. And a small investor like us cannot wait for that much time to get our results. We want to see quick results within, say, 2 years maximum. If you can't see within 2 years, the visibility becomes poor, then I won't prefer such a company. Long-term investor, no doubt about that, but around 2 years is the term. I must be able to see the gains in 2 years, but I will keep the investment going for the next 2 decades also. Now, so what are the sales to profit ratio we have seen? Then price to book ratio, book value. Book value means assets. We look at the assets and we look at the price. If a company is going on adding assets, but the profits are not increasing, prices are not increasing, that means assets are being added without reference to their earning capabilities, or you are adding assets but you are not utilizing them. So, price to book ratio will indicate that. Now, price to book ratio has got so many other connotations also. Sometimes you purchase idle assets which are not required for production. So, such things are there. So, therefore, I generally prefer price earning ratio. So, price earning ratio again you can calculate in many ways. Price generally we take the latest price. Earnings we take the EPS of the latest current. I take, not all, I take. Many people take trailing 12 months, that is current EPS and previous 3 quarters EPS, total becomes annualized EPS. So that is price by trailing TTM, trailing 12 months EPS. So that indicates the static price earning ratio. So what will be the future? This is for the past, but what will be the future? We don't know from this. Now, therefore, what I choose is latest price divided by latest EPS into 4. That indicates a level of what is going to come in the next 4 quarters, next year. To a certain extent, that's also not very accurate, but that. Of course, if you still want to go a little further, look at the acceleration in the price in the EPS in the last 4 quarters and average it, and for the current quarter go on adding that average growth and then take the estimated EPS of the next 3 quarters. That's also one of the methods. So like that, but I take the latest quarter into 4 unless the seasonality. In the case of scripts like Manpasan, 2 quarters are very low productivity and 2 quarters very high productivity. In that case, you will have to go for trailing 12 months only. So like that. Then, that is price earning. But always look for sales growth. See whether sales have been growing over the last 2-3 years and during the last 5 years. Whether profits have been growing similarly over the last 5 quarters and over the last 2-3 years. Likewise, earnings per share, EPS, whether that has been growing. Why we should look at EPS is sometimes the growth in the net profits is diluted because of the growth in equity. Some company managements are very prone to bloat their equity. If that tendency is there, avoid such companies. Now, all said, whatever we are doing about the estimated price, many people ask me, what is your target price for the next 1 year, 2 years, like that. I don't give any target prices. It's difficult, it's not possible. And if I give something like that, I would be doing a disservice to all of you. So target prices I won't give, but the direction we should be able to predict. Whether the prices will move upwards, even that is difficult, let me tell you. What we can predict is whether the company performance will move up. That is the thing that we can predict. In a normal market, if the performance are improving, the price also should improve. Now, in 2019, I do expect that the markets will be good. Markets must be good. So, March, of course, elections are there. The first 5 assembly elections were a washout for BJP, not fully, but obviously, to a certain extent. Now, the big battle is on between the Congress and the BJP. We will have to see how the BJP will manage. Now, how they manage is a different thing, but if we go by company performance, sooner or later the prices will increase. So, therefore, select good companies, And if the prices are like now, see, many companies are available at single digit price earning ratios. That is good for you. Invest in those companies. Ensure that they are good companies with good performance track record, not about price. So ensure that you have a good portfolio. A portfolio, I have always mentioned minimum 10 companies, optimum 15 companies, maximum 20 companies. Have good companies, not suspect companies. Now, watch their performance. If their performance does not match your expectation, sell them and go for another one. There are very good ones available in Indian market. So Q3 results, watch out. Select the best results. I am going to give you the best results also, but I am not going to say you buy. When I say the results are good, it means that. So, another thing that I would like to mention is earning is one thing, spending also is another. Don't waste your life just amassing wealth. Now, for every 10 rupees that you earn, at least spend 1 rupee or 2 rupees on your spouse, on yourself, on your spouse, on travel, on being happy. See, if you are not happy, whatever money you earn is of no use. We die a billionaire, but the life has been spent without happiness, without joy. That's meaningless. So be happy, make your spouse and make your children happy, enjoy your time, but earn well, and don't spend more than what you earn. So 1/4 or 1/5 you spend, no problem, and go on. I wish you all the best. Keep your health well. See, if you don't keep your health well, whatever you earn will be again a waste. So, health should be there, happiness should be there, relationship should be good, and then comes earning, financial health. So, maintain all these things, and I wish you all the best of luck in 2019. Thank you for listening. I will be back with you with another great concept. Thank you.